What is up? What is up, y'all? We are back with the final video in this advanced market structure series, this market structure PDF series, video 14. So, guys, sure you already know what's up. We already know what we're doing. So, let's get started on this next analysis, right? So, let's see. So black. So this example here, we got GBP NZD on the 1 hour. So what do we see 1 hour structure doing, right? So see a little liquidity grab, right? And then a minor break of structure, and then a retest, right? Another break of structure, and a retest, right? Look, another little break of structure, a retest, and then finally here we have another break of structure and a retest, right? So we understand that the 1 hour is bullish, right? So when we go to the lower time frame on this area here, what do we want to see, right? What do we want to see? A lower time frame break of structure. So we're going to drop down to the lower time frame here. Now we're on the 15-minute. So we saw that 1 hour break of structure, right? And this was our 1 hour point of interest here, this structure here. And we finally see a rejection, and the retracement fails to give us a lower low, right? But what happens? Right, so rejection, we get a retracement, and then a trade higher, right? Right, this is higher, so we got a minor break of structure. And we can see that that retracement before breaking structure here, that would have been our point of interest. So entry at structure between the 62 and 72 fib levels. Next setup, we have GBPUSD on the 15-minute time frame. So what do we see? Kind of the same as the last setup. You saw a liquidity grab and then a break of structure, right? Break of structure. Here is the last push down. That's why I chose this area. This is the last push down before the break of structure. But regardless, we're not entering here or here or here anyway. We're waiting for a break of structure. So, you know, this rejection didn't give us that. This rejection didn't give us that, but this one does. So we'll be looking back in our demand zones, our demand levels, right? For a lower time frame break of structure. So we're on the 15, and now we drop down to the 5. And we can see here, right? This is this area here on the lower time frame, this point of interest here, this 15-minute point of interest. See, we got a reaction and a break of structure. So look, price starts to make a retracement, and it doesn't come back here, but it breaks structure again, right? This is higher than this. And we come back into demand zone and trade higher again, right? And look at what we see, right? We see minor structure being broken, okay? So back in the retracement of this, we could have entered here, here, we could have entered here, right? Some of this mess. So we could have entered here or here, right? And if we look at this, structure lines up around that 52, the 72 fib level, right? So anywhere in that area would have been a good entry. And then stop loss just around the low, which would have been 7 pips for a 33 pip target. So over a 3-to-1 basically with that. Nice setup. So here we go. Next setup, we got NZDCAD on the 15-minute time frame. Now this structure looks juicy. So what do you guys see here? Right? Bearish order flow, right? Bearish order flow, respecting order flow, right? This is really clean. Respecting that bearish order flow. So what do we see, right? First break of structure, right? Look to the left. First break of structure, we get a retracement, right? Let's say that we possibly missed this entry. And then we see another push to the downside, right? There's this big old inefficiency, 50%, another break of structure, right? So we could have been entering, anywhere here on that structure, doesn't matter, right? And we're on the 15-minute time frame. So already now, that the risk to reward is really good already. So this isn't much drawdown. This isn't much drawdown from this entry here. And, if you want to make it even better risk to reward, we go to the lower time frame in this area and wait for a break of structure to the downside in line with, what would be the higher time frame on this would be the 15-minute. So we drop down to the 5-minute, right? And what do we see, right? Well, we already analyzed this break of structure, this retest, this break of structure, this retest. But now look, on the 5-minute, we get this break of structure and this retest here. Oops. We get this retest here, right? So look, say that this could have been our entry, right? And now we're on the 5-minute. I think we could get away with our entry here, a 10 pip stop, and then a target, maybe at this low here, target this low, right? So, before, go back when there wasn't any drawings on this, and feel free, any of these charts actually, really feel free to take a screenshot of these so you can study them, right? So yeah, clean setup, clean cells, clean bearish order flow, right? Bearish order flow. Cool. So last example right here. The last example, guys, the last example. So before we get into this example, actually, I want to say, if you've made it this far into this series, I just want to let you know that you are highly appreciated, and hopefully you didn't sit through this and not get any value through this. So, put a lot of work into this series. So hopefully you guys, at least get something from this and, incorporate it into your trading. So I appreciate you guys very much. But anyway, the last and final example, NZDJPY on the daily time frame. So what do we see, right? Maybe a little demand zone that had a rejection and a break of structure, right? We see this section of structure here. It didn't retrace back into that previous broken structure. It just continued to the upside, right? Which, if you're looking at this, you got a high here and a low here, right? So which one's which one gets broken? The high, right? The high, correct. So we don't retrace, we continue to the upside. And this is a very sketchy point of interest, right? This is a very sketchy point of interest, but you can anticipate that there might be some type of retracement back into that area, right? And that's what we see. So there was a retracement here and then giving another break of structure, right? So at this time now, we start seeing the retracement back in, and that's when we want to go into that point of interest on the lower time frame, right? So we drop down from the daily to the 1 hour. And what do we see? What do we see? So we're looking at this area, guys, right here, this daily point of interest, right? So what do we see? Daily point of interest, a rejection. See if you guys can, there. A rejection here, right? From that daily point of interest, a rejection on the 1 hour. And look what happens. This clean break of structure here, right? This minor break of structure, right? Just an immediate, it got to that level and just immediately rejected out of that level. So it's very, it could be a very volatile area, right? And you see right here, right? When it retraces back into that area, you can see we get another retracement and a break of structure again to the upside. So now we're really, really, confident in that bullish order flow, right? We broke structure to the upside twice, right? Broke structure to the upside twice, and this structure never came back, right? It never got tested. And it could still be a point of interest that you watch in the future, right? But I just want to note, I want to note a setup right here that you could have taken and it would have broke even on you, and you could have realized that there was that point of interest lower, right? So what we see, price grabs liquidity here and immediately shoots to the upside, breaking structure and retesting back in this demand zone right here, right? So this is on the 1 hour on NZDJPY. So maybe the pips from here to here wouldn't have been large or as much as you would have expected, right? But you got to realize, you know, the markets, the banks, you got to realize that they always want to sell higher than you, and they always want to buy lower, right? So that's why there was a retracement back in this previous broken structure. But that is it for this series. Is crazy. We went through every single page, and yeah, hope you guys got a lot of value from this. We we went over a lot of setups, right? We went over a lot of setups. So, but yeah, from start to beginning, we we went over in depth, like in super depth, um, advanced market structure. So some of you guys should be gurus by now, um, you know, especially after watching all of this, right? Because I want you guys to note one thing that is in every single one of these examples. And that is a higher time frame point of interest and a lower time frame break of structure from that higher time frame point of interest, right? It's it's so repetitive, and that's one thing that I want you guys to train yourselves to get at, you know. So that'll be it for this series. Hope you guys got a lot of value, and I will talk to you guys later. Peace out.